Welcome back to Market Day Report. I'm Scott Shelty, otherwise known as the Cow Guy, right? So I've got the black and white on. It's a little bit of a different colored shirt today. It's a little bit of a coat of many colors. That's a Dolly Parton song, I think. I don't know. Anyway, why don't we get to the things that really matter, and that's your money, your markets, and your marketing plan. Let's take a look at what's happening in that corn table. Very, very quiet. Look at this. 0.75 cents higher, basically in the front 3 or 4 contracts. We've got Dees last at 5.34 3/4, which is less than 2 cents from the lows of the day. We're going to keep an eye on that one for you as we get closer to the close and the end of the week. We've got March up 0.75 cents as well at 5.43 3/4. All right, let's take a look at what's happening in soybeans. Soybeans are a little bit better as well. 2 3/4 higher in that NOVE contract at 12.50 even, while Jan is up 3 cents at 12.61 1/4. Moving right along to the Chicago wheat market. Chicago wheat's been taking it on the chin a little bit. The December contract off 7 cents at 7.34 1/4. We're going to call that about a half cent off the lows. We'll definitely keep an eye on this one for you going into the close. March is off 6 3/4 cents at 7.48, and that is basically on the low. So we got to keep an eye on that March on that Chicago wheat. Let's take a look at Kansas City hard red wheat. That's a little easier as well. 4 3/4 cents lower, and we're on the lows there in D. 7.37 is last. The low is 1 tick lower at 7.36 3/4. So let's keep an eye on the hard red wheat and the Chicago wheat because it looks as though we're getting weak as we go into the close. How about spring wheat? This one's been tracking oats a little bit more, and that's why we're a little bit better here. We got Dees up a penny at 9.43 1/4. We've got March up 1 3/4 cents at 9.33, so a little bit better there. Still a little weak as to where we have been in the day. So we're going to keep an eye on those wheat contracts for you. And then lastly, let's take a look at that cotton. The cotton's been interesting, and we've gone a little bit easier. We've rolled over. We were higher on the day. Now we're 18 bips lower, 18 points lower in that Dees contract at 111.43. All right, let's bring in Todd Horowitz from Bubba Trading. Todd's in Las Vegas. Those were a lot of numbers, Todd. We've got a lot to talk about, obviously. But what sticks out at you today? The floor is yours. You can say whatever you want.
Well, I think that from a grain standpoint, I think they're making nice little bottoms, and soybeans did hold that 1240 level. I think the jobs number was pretty much of a disaster from what was expected. I mean, I really can't get a feel for how the markets are reacting. The equities. In the meantime, oil got over $80 today, which is ridiculous when we have enough supply right here where we could actually keep oil at $30. But again, who am I? And there's just a lot going on that doesn't make a lot of sense. And of course, the Fed cannot continue to try to pump up or ease these markets. And of course, we're seeing that the notes and bonds get hammered, which means that interest rates are going higher. So there's a lot of things out there that could really create a big stir in all markets before it's all said and done.
Right. And now we've got a USDA report, a WASDE report to worry about next week. And we'll obviously focus on that. And the reason why I think you're bringing up these outside markets is because, these things are going to affect the other side of the ledger, right? Our demand, our exports, all those types of things that can slowly but surely, eke into your marketing plan. And also, these are going to affect our prices on a day-to-day basis. And we've already seen in the last 3 months how sometimes those outside markets, especially when it comes to the equities, when they have a big downdraft day and we've got to risk off, we get kind of caught in the crossfire. So We've done well to hang in there, and I think it's pretty important. But the reason why we do bring those things up, and as I talk about them a lot, is that just for the same reason you did, we had a horrible jobs number today. We were expecting a lot more people to go back to work, and it's just not happening. We've got over 10 million jobs that are wanting people to, their job openings, and 8.4 million people looking for work, and we can't put the two together. I don't get it. So just like you said, there's a lot of things out there that don't add up. And the best way I can put it is, what we're putting in the engine, what we're putting in this economic engine, and commodities are included in that, does not equal what's coming out of the exhaust, bottom line. And so we need to pull over, lift up the hood, and take a quick look. We're going to go away. Don't move. We're going to come back and talk livestock with Todd Horowitz after this. Welcome back to Market Day Report. Thanks for staying with us. Thanks for tuning in. If you're just tuning in, we're going to go through some livestock here, and then I'm going to hand it back over to our guest analyst, Todd Horowitz. Let's take a look at live cattle. The Cow Guy likes to talk about live cattle. What's happening in that market? We're solidly mixed here. Dees is sharply unchanged, right, as we would say on the floor, at 130.10. We've got February up 17 cents at 134.82. Moving right along to the feeders. Let's see what's happening there. just a little easier, but you can tell by the change of day, and nothing too alarming here, that November contract's off 12 cents at 161.47, while Jan is off a dime at 161.15. And then lastly, to round out things in the livestock sector, we can take a look at lean hogs. And again, there's another mixed board here for us. December's off 27 cents at 81.75. February's off 35 cents at 84 even. But you can go out to May throughout the deferreds and find a dime rise in that May contract. Well, let's bring back in Todd Horowitz. Todd, thanks for waiting around for us. Anything you'd like to address? I mean, we're going to have some interesting times, like we said, in the top half of this segment. But there's a lot of things out there. Anything you'd like to, talk about?
Oh, I think, Scott, other than the cattle and hogs look pretty good and they've had some nice movement and held bottoms, I think there's some big problems here. The input costs for these farmers continue to rise, and they're really rising faster than the prices that they can get for them. And I think that's going to be a problem. We continue to ignore the things that are right in front of our face. But I mean, the cost of fertilizer, it affects every single thing they do. The cost of fuel, heating oil, natural gas. I mean, these are going to be very big things that are going to come to roost at some point because, farmers, they got to make money. And it's hard to make money when your input costs are going up higher than the prices that you can sell your product at. And I think that's an issue that needs to be dealt with. And there's where the real inflation comes in. And maybe we haven't felt it as much yet throughout us, but it's good. It's coming, and it's coming everywhere. And I think that's a big concern that we have to be worried about.
You're so right. I had a guest on the radio show this morning here, and he said exactly the same thing as you did. But he said a lot of times when you see these input prices for these farmers rise at the speed that they're rising right now, a lot of times you don't see that, like you said, the same return when it comes to the price of the commodity that you're growing or raising. And a lot of times it's even worse. Sometimes you see that commodity price tailing downwards as those input prices are skyrocketing, and then you have a real mess on your hands, and that's something that we have to watch out for. So we've got to worry about Mother Nature. We have to worry about, what's happening with China. You have to worry about what's happening with the weather down in South America. There's a lot of things still out there, but there's only one thing that's for sure, Todd, and that is the inflation and these input costs. So that's the given on the balance sheet. All right. Well, I'm really glad you brought that up because that's something I talk about a lot too. Thank you very much. That's Todd Horowitz. He's Bubba Trading, and he's in Las Vegas. I'm in Nashville, and I'm going to hand this back over to Tammy.